As Trump stirs controversy with tough tariffs on Canada and shocking statements, China quietly strikes a major deal with Canada, shaking the global energy market. Could this signal a shift in the global economic balance? Let's explore the potential consequences. U.S.-Canada relations and China's role. The trade relations between the U.S. and Canada are currently experiencing significant tension due to President Donald Trump's tariff hikes on Canadian oil and gas exports. This policy has severely impacted cross-border trade, creating friction between the two nations. However, amidst these challenges, China is strategically positioning itself by strengthening its economic ties with Canada, particularly in the energy sector. A notable move in this regard is the expansion of the Chinese petrochemical giant Rongsheng into Calgary, which symbolizes Canada's growing role as a key energy supplier to Asia. This shift comes as the U.S. continues to impose tariffs on oil imports, allowing Canada to leverage this opportunity to boost its standing in global energy markets, especially with countries like China looking to diversify their energy sources. Additionally, U.S. tariffs on foreign-made cars are also having a profound impact on the American consumer market. A prime example is the Ford F-150, a popular model that uses parts sourced from several countries. The tariffs have led to rising production costs, which have in turn caused significant price increases for American consumers. Some automakers are now contemplating the possibility of shifting production back to the U.S. to avoid the tariff costs, but such a move would be fraught with challenges, including high costs, time-consuming logistics, and the difficulty of realigning supply chains that have been globally integrated over decades. This is particularly problematic given that the automotive industry operates on a just-in-time production model, which relies heavily on international suppliers. With all these tariffs, do you think it's worth the price hike, or is it time to switch to electric scooters? Let me know your thoughts below. From a broader perspective, the escalating trade tensions reflect a shift in the global economic landscape. While the U.S. has become more insular in its approach, imposing tariffs and pursuing a more protectionist trade policy, countries like China are aggressively seeking new markets and forging stronger trade relationships elsewhere. China's push into Canada's energy market is a prime example of how nations are diversifying their trade strategies. In fact, China's interest in Canada goes beyond just energy, as it also seeks to invest in other sectors, such as infrastructure and technology. This shift is part of China's broader initiative to solidify its role as a dominant global economic power, leveraging its financial clout to create long-term partnerships with countries that are looking for alternatives to U.S.-dominated trade systems. The evolving dynamics between the U.S., Canada, and China indicate that the traditional economic alliances are being restructured. Canada, in particular, is finding itself in a delicate position, balancing its historical relationship with the U.S. and the growing influence of China. As global trade evolves, Canada's role as an energy provider and a trading partner will become increasingly crucial, potentially reshaping the power dynamics of North American trade and global energy markets. The current situation also underscores the broader implications of President Trump's trade policies, which are pushing traditional allies like Canada to reconsider their economic alliances. In the long run, these shifts could potentially lead to a more multipolar global economy, with China playing a much larger role as a driving force in global trade, investment, and energy markets. Canada's strategic decisions in response to this new reality will be critical in determining its economic future on the world stage. The shifting global beef market. A significant disruption in global trade occurred when China rejected $520 million worth of U.S. beef, citing concerns over safety compliance. However, many analysts view this decision as a calculated response to the U.S. tariffs imposed on Chinese goods. This move by China was strategically timed, signaling its displeasure with U.S. trade policies and reinforcing its position in the ongoing tariff conflict. As a result of this rejection, Russia quickly seized the opportunity, ramping up its beef exports to China. The country has not only increased its supply of beef to meet the demand, but has also invested heavily in infrastructure to facilitate long-term trade with China, cementing its role as a key player in the global beef market. This shift represents a significant setback for the U.S., which had previously dominated the global beef trade, especially in the Chinese market. The U.S. beef industry now faces the challenge of regaining lost market share, while countries like Russia, Brazil, and Australia are stepping in to fill the gap left by American exports. For Russia, this expansion into the Chinese beef market is not just a short-term opportunity, but a long-term strategic move to strengthen its economic ties with one of the world's largest consumers of beef. Looks like China's beef with the US just got a lot more literal. Do you think Russia will dominate the beef market now? Or is the US going to find a way back in? Drop your predictions below. It's steak dinner time for some, but a real grilling for others. From a broader perspective, this shift in trade dynamics highlights the far-reaching effects of trade wars and tariff policies. The U.S. decision to impose tariffs on Chinese goods has not only led to retaliatory measures like the rejection of U.S. beef, but has also opened the door for other nations to capitalize on new trade opportunities. Russia, with its increasing beef exports and investments in infrastructure, is positioning itself as a long-term partner for China, creating a lasting impact on the global beef market. Meanwhile, the U.S. beef industry is left grappling with the fallout from its strained relationship with China, and it remains to be seen how quickly it can recover its footing in the increasingly competitive global market. The shift in the global beef market also underscores the growing influence of China as a major player in global trade. As countries like Russia and Brazil increasingly look to China as a key trading partner, the balance of power in agricultural trade is rapidly shifting. The long-term implications of this realignment could reshape global supply chains, with China playing an even more dominant role in determining which nations have access to its massive consumer market. For the U.S., this situation serves as a reminder of the vulnerability of its trade relationships and the potential consequences of escalating tariff conflicts. Trump's proposals for territorial expansion and political manipulation. In a series of provocative remarks, President Donald Trump proposed the idea of annexing Canada and Greenland, sparking significant controversy. He suggested that Canada should become the 51st state, positioning this as a solution to the U.S. military and economic challenges. By including Canada in the U.S. fold, Trump argued that the two countries could better coordinate their resources and security efforts. He also highlighted Greenland's geopolitical significance, particularly its vast reserves of rare earth minerals, which are essential for various high-tech industries, including defense and renewable energy technologies. These comments fueled concerns that Trump's administration was moving toward an isolationist and expansionist stance, potentially leading to the U.S. alienating its neighbors and undermining its diplomatic relations on the global stage. Trump's remarks on territorial expansion were met with widespread criticism, especially from political and diplomatic figures in both Canada and Denmark, where Greenland is an autonomous territory. The suggestion of annexation was seen as an affront to national sovereignty and a reflection of Trump's tendency to prioritize strategic interests over established international norms. Critics argued that such proposals risked further isolating the U.S. from the global community, pushing it away from its allies and intensifying its already strained relationships with key partners. Furthermore, the idea of forcibly incorporating territories through diplomatic or military means is a deeply controversial topic that raises questions about the respect for international law and self-determination. In addition to his territorial ambitions, Trump also openly admitted to employing political manipulation tactics, specifically by leveraging social issues to influence public opinion. He acknowledged his strategic use of controversies, often inflamed by polarizing issues like immigration, race, and national security, as tools to galvanize his base and shape electoral outcomes. By tapping into deeply rooted societal divisions, Trump crafted a narrative that resonated with voters' fears and frustrations, redirecting focus away from policy and towards emotionally charged topics. His candid admission underscored his understanding of how effectively manipulating public sentiment could be in modern political campaigns. This approach raised ethical concerns about the use of social issues as political weapons. Critics argue that such tactics only serve to deepen societal rifts and undermine the integrity of democratic processes. While Trump's method was undeniably effective in rallying his supporters, it also highlighted the dangers of exploiting divisions for political gain. It's evident that Trump's strategy was about more than just securing votes. It was about creating a political environment where his influence remained unchallenged by stirring up contentious debates that kept the public's attention focused on divisive issues. In sum, Trump's proposals for territorial expansion and his manipulation of social issues reflect a broader pattern of governance characterized by opportunism and an emphasis on personal political gain. These tactics not only raised eyebrows internationally, but also revealed the lengths to which he was willing to go to secure both territorial control and electoral advantage. The long-term implications of these strategies are yet to be fully understood, but they undeniably contributed to the further polarization of American politics and its diplomatic standing. Economic impact of tariffs and trade wars. President Donald Trump's tariff policies, particularly those targeting Canadian goods and other trade partners, have significantly strained the U.S. economy. These tariffs have led to a series of unintended consequences, including higher consumer prices, job losses, and mounting inflation. As a direct result of the increased tariffs, businesses, especially those in manufacturing, are facing higher production costs, making it more difficult to remain competitive both domestically and internationally. The U.S. stock market has also shown increased volatility, with investors responding to the uncertainty created by Trump's unpredictable trade moves. The inconsistency of his tariff policies has created a climate of instability, making it difficult for businesses to plan long-term investments and for investors to feel secure about future returns. The rising costs associated with tariffs have been particularly hard on American consumers, as prices for everyday goods continue to climb. This situation is compounded by a growing national debt, as the government borrows to sustain its fiscal policies. The combination of high tariffs and expanding national debt is putting significant pressure on the economy, resulting in higher inflation rates. For consumers, this means increased costs for a wide range of products, from electronics to groceries, and a reduction in their purchasing power. Looks like Trump's tariffs are giving the U.S. economy more of a headache than a new iPhone release. Do you think this economic roller coaster will level out? Or are we in for a wild ride? Share your thoughts below. Who's feeling the squeeze more, businesses or consumers? Economists and analysts are increasingly warning that the U.S. economy is heading toward a potential recession if these issues are not addressed. The absence of a coherent and sustainable long-term economic strategy is further undermining investor confidence and economic growth. As businesses face higher costs, job losses mount, and inflation rises, it becomes increasingly clear that the current trade policies are having a detrimental effect on the economy. Without a shift toward more predictable and balanced trade agreements, the risk of an economic downturn grows stronger, and the U.S. could find itself grappling with the long-term consequences of a weakened financial system. From a broader perspective, the economic fallout from Trump's trade policies reveals a critical challenge: balancing the need for protectionist measures with the realities of a globalized economy. While tariffs are meant to protect domestic industries, they also disrupt established supply chains and increase costs for consumers, thus undercutting the very economic stability they aim to protect. If the U.S. continues down this path without a clear and strategic approach to resolving trade conflicts, the risks of an economic slowdown or even a recession will become more pronounced, impacting businesses, workers, and the country's overall financial health. Trump's trade strategy and global competition. The article underscores a significant shift in global trade dynamics, highlighting how China and Russia have successfully outpaced the U.S. in markets like beef and automotive exports, areas traditionally dominated by America. While the U.S. grapples with its own trade policies, particularly under President Trump's protectionist approach, countries like China and Russia have seized opportunities to expand their influence in these key industries. Analysts argue that the U.S. is falling behind due to its singular focus on tariffs and protectionism, lacking a clear and cohesive strategy to maintain its competitive edge in the global market. Trump's trade strategy, characterized by tariffs and aggressive economic nationalism, has created an environment of uncertainty that has made it difficult for American businesses to thrive. By prioritizing short-term political wins over long-term economic stability, the U.S. risks losing its leadership in key global markets. While protectionist policies are designed to shield domestic industries from foreign competition, they often have the opposite effect by raising production costs, limiting access to global markets, and alienating trading partners. China and Russia, in contrast, have capitalized on the U.S. shifting priorities. China, with its vast consumer market and manufacturing capacity, has rapidly increased its dominance in sectors like automotive production and agriculture, including beef, as seen with its recent pivot away from U.S. exports. Russia, meanwhile, has made significant inroads into the global beef market, particularly in China, further reducing U.S. market share. These countries have demonstrated strategic foresight, strengthening their global presence by diversifying their trade relationships and investing in infrastructure to support long-term growth. The economic and political turmoil created by Trump's trade policies raises serious concerns about the U.S. future role in the global economy. With trade wars escalating, the U.S. faces growing isolation as its allies seek more stable and predictable trade partners. As China and Russia continue to strengthen their positions, the U.S. must reconsider its approach if it hopes to maintain its status as a dominant global economic power. The current trajectory suggests that without a more strategic, collaborative approach to trade, America could find itself increasingly sidelined in the global competition for resources, markets, and influence. In summary, the lack of a coherent and forward-thinking trade strategy in the U.S. is contributing to its diminished standing in global trade. While the Trump administration's protectionist policies may have been designed to protect domestic industries, the longer-term consequences are proving to be detrimental, both to U.S. businesses and to the country's broader economic influence. As global competition intensifies, the U.S. will need to rethink its approach if it is to stay competitive in the rapidly evolving global marketplace. Overall, the article paints a picture of a U.S. struggling with trade wars, internal economic challenges, and global competition, with Trump's policies potentially leading to a long-term decline in the country's economic standing.